The three loans that you should look out for when buying your first home. This is Ricardo Sanchez, the Superman of real estate, where we talk real estate, life, and entrepreneurship. Now let's get right to it. So I know for a lot of you guys, especially the millennials, it is very difficult to know which way to go, which loan to get. And in this video, I want to simply explain to you what loan best fit for you guys. So the very first loan that I want to talk about is called the FHA loan. FHA loan, the minimum down payment requirement is 3.5% down. And you can actually qualify for an FHA loan when you have a lower credit score, which is around a 580. Usually, if you want to get the better interest rate, you go up to a 640, but you can probably qualify with a 580 credit score with this loan, with the FHA loan. And what I love about this loan is that it requires a minimum down payment, and it is a first loan that I recommend if you're looking to buy your first home. So there are some requirements for the FHA loan. There is a minimum, since it's a federal housing loan, you actually have to live on the property for a minimum of 1 year. So you have to live in the property for 1 year. So what I did in my first home, instead of buying a home, I actually bought what's called a fourplex or an investment property. So as a first-time home buyer, you can actually use that loan to buy your first investment property or duplex or a triplex. What these are rental properties. You either have 2, 3, or 4 units. So my first property was a fourplex, and by law, so that you don't commit loan fraud, you have to live in the property for at least a whole year. Interest rates right now for the FHA loan, they still run in the 2s, 2.6, 2.9, 3%. So the FHA loan will actually give you the better interest rate. And that's gonna lead me over to the conventional loan. Hey guys, if you're liking the content, don't forget to press the like button below, and don't forget to subscribe to the Superman of real estate, where we talk real estate, life, and entrepreneurship. All right guys, the second type of loan that I'm gonna talk about today is called the conventional loan. The conventional loan requires anywhere from 5, 10, 20%, or 25% down payment. So I'm gonna break it down to each of the different down payments and what is their purpose. So the very first one, the 5% conventional loan. So let's say that you already used up your first FHA loan, your first time home buyer loan, and now your family grew, you got married, you had kids, you adopted a dog, so now your family grew. So within a year, like we said, you have to stay in your first property. Within a year, you can actually qualify to buy your second home. And your second home, what they're gonna require is a 5% down payment. It's a little bit more than the 3.5%, but it allows you to buy your second home with still keeping in place the first FHA loan in place. So that is gonna be for the 5%. And it has to be a second home in which you are going to move into. You have to move into the property as well. So that is the requirement for the 5% down payment. The next one I wanna talk about is a 10% down payment. So this would be for a second home in a different state. So let's say that you're coming from California, you want to buy a second property or a vacation home here in Las Vegas. They're going to require you to do a 10% down payment. Okay, so it is for vacation homes and second homes away from your original state. Like I said, if you're from California buying here in Las Vegas or in Nevada, then you would give 10% down. The next one is 20%. So 20% is for any investment property. So let's say that you were going to buy a condo, a townhouse, or any single family home as an investment property, you would have to give a 20% down payment. So when you're not going to live on the property, that's when the bank requires you to give a little bit more down. It's just for it to be a less of risk for the bank. They want to make sure that you can give at least a 20% down payment. And the last one is a 25% down payment. Maybe not a lot of you know, but like I said, on my first loan, I bought a fourplex, and I used up my first time home buyer loan, which is FHA. If you do it the opposite way, if you first buy a home with your FHA loan, the second time around, if you're going to buy a duplex, triplex, or fourplex, you will need to put 25% down payment. So 25% down payment is for anything that's called a multi-unit, which is a 3, 2, 3, or 4plex. And that is when they require a 25% down payment. All right, guys, so what are the requirements for you to qualify for a home loan? So the bank wants you to have at least 2 years of work history. Usually they like you to have within the same work of line. Let's say that you were a chef and then in a year you move to a different location, but you're still a chef. That would be in the same work line. Even if you do transfer from a different trade to another, it is still possible to qualify, but the bank wants to see at least 2 years of work history. And along with those 2 years, they want to make sure that you've been reporting your taxes to the IRS and that you've been paying your taxes on time. So they're going to need 2 years of work history and 2 years of taxes. So there's actually another video that I go more into depth with this, of why it is important to report your income to the IRS and pay your taxes. Go ahead and watch it. I will go more into depth. Click the link below. The second item that you need to be able to qualify for a home loan is actually a month of your paycheck stubs if you're a W-2. And if you're a 1099, well, all you need is as the previous step before, is you need to do 2 years of taxes, your 1099 form. And this is the second item that you need to be able to qualify for a home loan. The third item that you need to be able to qualify for a home loan is 2 months of bank statements. The bank just wants to make sure that you have some funds in the bank, and they want to make sure what's called it's seasoned. So it needs to be in the bank for about 2 months. They don't want any random money coming in, and please don't deposit any random big chunks of money into your bank account, because it'll be a red flag to the IRS and also to the bank saying, where did this money come from? So 2 months of bank statements with the money in the bank account to what's called seasoned for at least up to 2 months. The third and last loan that I want to talk about is called the VA loan, or for the loan for dear veterans. By the way, thank you guys for serving our country and serving us. It is because of you that we have our freedom. So thank you guys. And that is why our country has made what's called the VA loan, or you can reap of those VA benefits. So the benefit of the VA loan is that you don't have to give any down payment. So your down payment for a VA loan is actually 0%. There's another few items that come with the VA loan. There is what's called a termite inspection. Not sure why, but the VA requires not from the veteran, but either the agent or the seller must pay for this termite inspection. So that is another item that is included with the VA loan. And so that is one of the benefits. So how is it that you can qualify for your VA loan? So I know when you serve, there is a contract that you do, and there's a certain amount of time that you need to be completed before you can actually reap of those benefits. But if you have any questions, you need to talk to your upper management or your lieutenant. And there's a form, what's called the DD-214 form. So once you receive the DD-214 form, that's all I know. I'm not sure how you get it, but it's when you complete a certain amount of time. But when you get this form, it specifically says that now you can reap of those benefits. So the VA loan is very useful. Like I said, it is 0% down payment, so you don't have to give any down payment at all for dear veterans. And it's just a way to say thank you guys for serving our country, for helping us preserve our freedom. There's still something what's called closing costs, but usually sometimes we can negotiate the seller to pay for it, but that is the benefits of a VA loan. All right guys, so just a quick recap. I want to go over the 3 loans: FHA for first-time home buyers, conventional 5, 10, 20, 25% down, and VA 0% down. So if you guys have been enjoying these videos about real estate, life, and entrepreneurship, please go ahead and comment below any other ideas or any type of other real estate topics that you would like to hear from us about. Last thing guys, don't forget to subscribe to the Superman of Real Estate channel, and don't forget to press that like button. We'll see you on the next video.